Look, it doesn't matter whether you're in stocks, crypto, precious metals, whatever. Wherever your monetary focus lies, the markets are nonstop drama right now. An opinion is split about where we go next. Is Bitcoin dumping because of the 4-year cycle? It's all played out, it's peaked, everybody forgot to sell again, and it's all over. Is the entire stock market really propped up by a manic AI bubble that is about to pop at any second and make the dot-com crash look like a walk in the park? Or is everyone just freaking out about the kind of drawdowns that always happen in volatile bull markets? Every bull market does climb the wall of worry, after all. If so, does that mean there's more upside still to come as we head into 2026? From where I'm standing, the latter seems to be much more compelling. 2026 should be a big year, so let's start with an important recent signal that no one seemed to pick up on. And then we'll look at some other major market pointers that lay out where the road might have got a little bit bumpy, but the direction remains the same. And so the first thing to keep in mind, the signal that passed people by, is that earlier this month, the New York Fed met with Wall Street. Specifically, this was New York Fed President John Williams meeting with primary dealers from banks that underwrite government debt. Could sound bad, right? Emergency meeting, all the right people in the room, scary things could happen. The meeting happened not because everything is going great, of course, and it was time for a celebratory catch-up, but due to concerns about stress in the financial system and signs of tight liquidity conditions. But a contradiction, of course, when it comes to risk assets like BTC and tech stocks is that bad news can actually be good. If the Fed and Wall Street are concerned about liquidity, what could the solution be? Increase liquidity, or at least make sure that it's flowing properly through the system. In fact, the meeting was specifically to discuss the Fed's standing repo facility, which is a liquidity backstop where banks and dealers can flip treasuries for overnight cash if funding gets tight, thereby preventing funding shocks. So, does this mean the larger Federal Reserve System is softening its approach? Well, look, the markets are currently hypersensitive to rate cut decisions, and this month we saw expectations of a December cut start high, then the Fed signaled that cuts might not be coming, the market dumped, before the Fed switched again to a much more dovish tone at the end of last week. So stocks rallied on Friday, the probability of a rate cut spiked to over 80% this week, while we've also seen the Bank of America chief investment strategist state the Fed needs to cut. Everybody knows the Fed needs to cut. Even the Fed knows the Fed needs to cut. Whether or not they do it is a different question, but everybody needs the cuts, man. The job market is weakening. The inflation is not exploding. This guy also mentioned that Bitcoin will be the first asset to sniff out a cut if it's coming, which usually is true. Nothing reacts to liquidity quite like crypto markets. So as we're talking about the Fed, we also need to look beyond December to 2026, because next May is when Jerome Powell's stint as Fed chairman comes to an end. Now, as we all know, Trump is no fan of Powell, or, well, not anymore, at least. You gotta remember, he actually nominated Powell back in 2017 for the position. The point is, it's safe to assume that whoever Trump picks to replace Powell will be on board with the president's current agenda of run it super hot. That is his current approach to the economy. They want interest rates back at 1%. They want money to be easy and flowing through the system. We can also assume, since markets are to some extent forward-looking, that assets will start to price in the new appointee before Powell actually steps down. So maybe once Trump officially announces who his appointee is going to be and the process starts, then people will start front-running that narrative. It might even turn into a sell the news event when the new guy comes in which case we get to buy the rumor before the run-up. Now, guys, if you need a good place to trade Bitcoin, ETH, Solana, XRP, top altcoins, BitUnix is running an insane deal right now. It's only good for a few more days, so you gotta act fast if you wanna get on board the current deal. Long the rips, short the dips, available to anyone, anywhere. That's you. When you sign up using the link down below, you're gonna be getting some insane exclusive sign-up bonuses. For example, deposit $1,000, get 200 back. $2,000, get 400 back. In fact, they have insane whale bonuses all the way up to stuff like you put 50K in, you get $5,000 back. $100,000 deposit, $10,000 cashback bonuses. That is absolute insanity. The offer expires in just a few days, so if you want to get on board, now's the time. Links down below. Go check it out. And when we talk about running it hot economically, don't underestimate how far Trump might go with this. They're literally talking about the equivalent of a new Manhattan Project to win the AI war. This is a president who seems to take stock, crypto, AI, the future of the world very seriously. His benchmark for effectiveness in office, he's looking at these markets. And who has previously talked about getting rates down as low as 1%, which is not without precedent. Okay, that's the President of the United States. So it's all potentially doable. Now, whether or not that's actually best for the economy in the long term is a very debatable topic, but it definitely would support the case for an extended bull market. The last time rates went that low was in response to COVID back in 2020. And of course, there were a lot of other moving parts at play. Markets absolutely ripped in 2020 and 2021, thanks to that basically zero interest rate regime and everything with the stimulus packages and stuff. Now, the other thing to consider here is the possibility of something similar to QE, quantitative easing, although not actually quantitative easing, that might be coming down the line. We already know the Fed is ending their quantitative tightening program. That's happening at the start of December. They've already massively reduced the program, but they're officially ending it. There's speculation that this opens the way to technical QE, which basically means an expansion of the Fed balance sheet, which itself equates with more liquidity in the system, as a result, which asset prices would tend to rise. That still means, though, that asset selection is important. The reality is that AI hype has been sucking capital out of the rest of the markets recently, including out of crypto, because why the hell would you buy these scammy crypto coins when you could own actual AI companies that do actual interesting shit? Buy a useless governance token or a data center. It's likely the AI and infrastructure are going to be good bets moving forward. I'm positioning myself in my portfolio for that. America needs to catch up with China when it comes to nuclear. They're looking to build like 50 new nuclear power plants in the next 5 years. Trump has pledged hundreds of billions of dollars in lending for nuclear power plant construction. But also, Bitcoin and crypto just had a massive reset. So if macro conditions align, markets rally, then there's a lot of room to the upside for quality assets that can catch a bid. And to keep up with exactly, of course, which assets are primed to run, sign up to my awesome newsletter. It's free. No, seriously, link down below. Go check it out. We cover stocks, we cover crypto, all kinds of stuff. 180,000 plus people a week reading it. You can be one of the sexy people. Go check it out. So finally, take a look at what Scott Bessent just said. And finally, take a look at what Scott Bessent just stated. Interest rate sensitive sectors are in a recession, but at the same time, he's confident about 2026 growth, and across the economy, there is no current recession risk. It's a mixed message, but it seems like a way to say to the Fed, we need rate cuts, but also to investors, this is not the moment to flip bearish. All of which underlines what this administration wants. Cut rates, get businesses back to expanding, get the housing market unfrozen, apply maximum gas to the economy, build nuclear reactors, build data centers, win the AI war with China. All this kind of stuff is going to result in shit tons of jobs and massive economic expansion, which will finally see the ISM PMI break out over 50, start the final phase of the business cycle, which we have a 12-month or so run up before we peak out. It's a theory anyway. Anyway, thanks for watching.